Yeah. Hey, what's going on, everyone? Matthew Soto, your mustache realtor here, and this is episode 2 of I Must Ask You a Question. And today we're going to be talking about the buying process and the loan process. And I have Victor here today. He'll tell you a little bit about himself, tell everybody what you do, why you do it, and who you're with and everything.
Alrighty, so like Matthew said, my name is Victor Almendarez. I'm with Town Square Mortgage. And a little bit interesting on why I jumped into this industry is because of personal experience. I grew up in a family that, was, I'll say, above average, pretty wealthy. But my parents never, ever bought a house.
Wow.
And we lived in the same house for years. We rented. We lived in a nice area. We had everything we wanted, but my parents never bought a house. And throughout the years, the economy in the country where I was born didn't go so well. My dad was laid off. And then at that moment, we realized what a huge mistake was to not buy a home.
Yeah.
And so that was really what pushed me into this industry. And then as soon as I got out of college, got my degree in finance, the first thing I did, even without having a job, is find a way to buy a house. Because the way I was thinking is, I have to buy a house, I have to pay rent, or I have to pay a mortgage.
Yep,
so it's one of the two. And I have to make the payment either way, otherwise I'll be living on the streets.
Yeah. Wow, man, that's awesome. So what I want to do today is I want to talk a little bit about the home buying process, the steps, from start to finish. And then also we're going to touch base on a few of the, mortgage questions that always come up from buyers, that they're asking me, and I'm always sending them to you, to mortgage company, to get those questions answered. Okay. So, the first step when you're purchasing a home, you would meet with a real estate professional right here. Hopefully it's me. If not, make sure you do get someone who's in the industry who is a licensed realtor, and they're the ones who's going to be looking out for your best interest. We'll meet. We'll have a little buyer's consultation. We'll talk about, your needs, your wants, price where you think you want to be in, and also, your location. What we'll do then is we'll send you to Victor, to a mortgage lender, loan officer, so that they can get you pre-approved. And so what I want to talk here about is, I try to tell people what the difference is between a pre-qualification letter and a pre-approval, but I know that's something that you can probably explain and elaborate a little bit better than I can. So why don't you go ahead and tell everybody, the difference between a pre-qualification letter and a pre-approval letter.
Perfect. So even though they sound kind of similar, they're completely two different things.
Okay.
The pre-qualification is something kind of like the consultation that you do at the beginning with your customers. Mm-hmm. You ask a bunch of questions, they give you answers. You're not looking at any papers, you're not looking at any official, it's everything word of mouth. So when they tell you, I make $50,000 a year, okay, do you say, okay, $50,000, what are your debts? People tell you 25, I used to have a credit card, pay $25 a month, okay. Based on that, you qualify for, $180,000.
Okay.
And so that's a pre-qualification, just information that the customer is giving you based on the questions.
Based on the questions.
But I don't have any documentation to prove that.
Uh-huh.
While on the other hand, the pre-approval, that's when you actually meet with the customer. And when you meet with the customer, you request some documents such as tax returns, W-2s, pay stubs, Social Security card, I-10, whatever it may be. And with the documentation and running credit, you can really determine how much the person qualifies for.
Okay, awesome. And see, that's why I started it off, in the beginning is we'll talk a little bit about what price range you think you want to be in. But then once a mortgage company, gets all your credentials and runs your credit and looks at your documentation, we'll be able to better elaborate and see what actual price range you want to be in based off, your monthly payment and things like that. So a few questions that I'm always getting, and we'll talk about that now before I go through the rest of the buying process, is what is the difference between down payment and closing costs? And can you also elaborate and educate everybody how much of a down payment is actually needed?
Okay, that's a great question. That's one of the things that on the initial interviews that I do, most of the time the people don't know what the down payment require or the minimum down payment is for you to be even start thinking about buying a home. So the minimum down payment, generally speaking, is going to be 3% or 3.5%, sometimes 5%. And it all depends on things like your credit score and what kind of loan program you're applying for.
Okay.
And there's different kind of loan programs, and that's a whole different topic.
Okay.
But yes, in order to buy a home, you need 3% to 3.5% down payment most of the times.
Okay.
Now, the difference between down payment and closing cost. The down payment is basically the money that you're putting towards the balance of your home.
Okay.
So simple numbers, if the property it's gonna be purchased for $100,000 and you put 3.5% down payment, that's $3,500. That your balance on the mortgage loan is gonna be $96,500 because you're putting the down payment of $3,500. The closing cost is basically the fees that you pay in order to get the loan. So you're paying lender fees, you're paying title company fees, the appraisal fees, any taxes, and any insurance that you have on that property.
Okay, awesome. So everybody's perception of you need 10 and 20, that's no longer necessary. That's, back in the past and what it used to be, correct?
Correct. Back in the day, yes, it was required 20%, and then they started lowering it. Now 3%, 3.5% is what is required.
Now everybody, I know you can get and come up with 3.5%, and whatever the closing costs are, seeing how you don't need 20%. Make sure you get a game plan together. Start budgeting. Cut out your beer, your cigarettes, whatever it is, that you spend on a monthly basis, Starbucks, and start adding up those pennies and saving up, because like he said in the beginning, you're either going to pay somebody else's mortgage, which is your rent, or you can pay your own and build, your own equity, your own savings account, for the future. So that's some great information. Why don't you touch base on people who are always asking, okay, well, what documents do I need to send to you to get pre-approved?
Okay, so in regards to documents, it depends also on the kind of program that you're applying for.
Okay.
But the general mortgage documents, I should say, that every lender out there is going to request are the tax returns, the W-2s if you work for a company, pay stubs if you work for a company, your driver's license, and the Social Security card or the I-10 letter.
Okay. And what about people who are like self-employed like myself, entrepreneurs, small business, what type of stuff do they need?
It's pretty much the same. You just don't have pay stubs, don't have W-2s. So we go strictly out of tax returns.
Okay. And how far back is needed for those tax returns? 1-2 years back?
There's different programs, but there is one program that only requires 1 year tax return.
Okay.
So you can be actually self-employed, and 1 year tax return should be enough. And sometimes you have to go to 2 years tax returns, and it depends on credit score and different other criteria that we look at.
Okay, awesome. Now, I also want to talk a little bit about the different credit situations. A lot of people are always like, I don't have good credit. And I'm like, well, how do you know? Have you checked? Have you talked to somebody? And they're like, no, I went off of Credit Karma. That's a big one,
Yeah.
Can you explain a little bit about the different credit situations? I have no credit, my credit's bad, and also educate people on why not to go off of a score based off of Credit Karma, for instance.
Right. So whenever you go and apply to a mortgage company, generally speaking, we look at, for the most part, the last 10 years history of your credit history.
Okay.
So we're not looking at the last time you pull and whatever you do with after you apply for that application to review kind of your credit.
Mm-hmm.
So we see quite often where Credit Karma, for example, says 680 credit score, and then when we pull it, it's a 700.
Okay.
And so, yes, it is a great tool for you to kind of manage and see how you're doing, and how they give you recommendations on how to increase your credit score, how you know, what things are affecting your credit score,
Okay.
what things are out there, so you can have an idea, but don't go by that score that you get on those credit applications.
Okay.
If that makes sense.
Yeah. And what about like people who say I don't have any credit at all because I don't have credit cards, I don't have loans out, and
Yeah. So sometimes having no credit is better than having bad credit.
Awesome. Okay.
So you can definitely buy a house with no credit. There's people over here that has come, you know, to the States on a work visa or whatever it may be, and they have only been here for 2 years.
Yeah.
They have their 2 years tax returns and no credit. They never open a credit card. They never bought a car. They never apply for, you know, buy furniture or anything that can
They're
generate
still
credit.
able to get approved and buy a home.
They're still able to come. Generally speaking, we use what we call alternative credit. So things like, you know, the rent is a huge one. Electricity, gym membership, toll tag membership.
Wow. Okay.
You know, whatever, any utility bill, gym membership, whatever. As long as you have more than 12-month payment history on time, we can use it as alternative credit.
Wow. Now that's going to be huge for a lot of people that I know. So let's talk about. People hear different stories out there. You know, they think buying a home is going to be free. You know, what are some different types of down payment assistance programs, or can you talk a little bit about down payment assistance programs, the goods, maybe the bads, or if it's all good, you know, who has them, and how can people have access to that?
Right. So down payments, a lot of people think free money. And yes, it is free money, and everybody wants free money. I mean, tell me where is the free money, I'm going to be there. It's
Exactly.
awesome. I don't think nobody's is gonna deny that. But the problem with applying for a down payment assistance program is that not only depends on you, but a lot of times it depends on the property.
Okay.
So it's not because I make X amount of money, I qualify for the down payment assistance, automatically means that I'm gonna get that down payment assistance.
Oh.
So some down payment assistance are only city based. Some of them have income limits.
Okay.
Some others have location limits. So, for example, if you're looking for a down payment assistance in the city of Dallas, which is the most common program, not everything that you consider Dallas will qualify for that program.
Oh, okay.
And then it depends on the dependents, and then it also depends on how many people are going to live in the property and how many of those are actually working. So there is a lot of different things, and yes, down payment is awesome, it's free money, but if you're only going to be buying a home because of down payment assistance, you may get into trouble. And I'll explain a little bit more about why.
Okay.
Let's say you're in a transaction and you start the process, you get in a contract. There's things like the appraisal, there's things like the inspection, the earnest money, and the option fee money. That is money out of your pocket as soon as you find a home.
Exactly.
Okay? Once you're approved by the mortgage company, okay, then all the approved file goes to the down payment assistance organization.
Mm-hmm.
And if for any reason they decline that loan, then what do? There's no way for you to save that money that you have already spent in earnest money, appraisal, option fee, all this kind of money.
Oh, wow.
So that is the risk that when I tell people that are coming just for a down payment assistance, I tell them, yes, it's great. And if it's there and if it's available for you and you qualify for it, we're going to go for it because it's definitely something that is the best for you.
Okay.
But don't be thinking to buy a property only based on the down payment
Based on
assistance
that.
program because you may get a hard stop.
Wow. Guys, and that's one thing that I don't want you to do. What Victor doesn't want to see is anybody lose money. You know, that's why we always have to, you know, hire the best people out there, hire a professional to help guide you through the process. That's some great information. Thank you, Victor, for sharing that. So I want to talk once again about, you know, the steps of buying from start to finish. You know, we kind of already went over, you know, you meet with a real estate professional right here. Then you talk to somebody to get pre-approved, which is right there. Next, once you're pre-approved, you know, we'll go more into detail about location. We'll start searching for homes, which is the fun part. We get to go into these beautiful properties, see if it's something that you can see yourself living in, you know, for the next 5, 10, 30 years, whatever, you know, you feel comfortable with. Once we find the one, what we'll do is we'll make an offer. and then we'll go possibly back and forth depending, on the house, if they have multiple offers, if we're able to negotiate, to get it under contract. And so once we are under contract, there's some stuff that we have to do, like get the house inspection done in a certain time period. We start the title policy with the title company. Once we're done with the option period and you want to move forward, after we negotiate, things that may have came up on the inspection report or whatnot, then a lot of it's going to be a lot of waiting. You'll be talking to, Victor, the mortgage company, a lot more because they got to get your appraisal ordered. They have to get the loan process going, start getting it approved. So they'll reach out to you to finalize a lot of the documentation, request different things from you once it comes out of underwriting and whatnot. Title company will get the survey ordered. So it's a lot of back end stuff that, it doesn't really involve you as the buyer. It's where I come in, where Victor comes in, and where the title companies, the people who you know, like, and trust to help you through this process, to get you to the closing table, where we'll meet and sign the papers, and we'll celebrate. We'll pop the champagne. We'll have the cookout, bring the fajitas or whatnot. And, after that, it's just a big celebration and hand you over the keys to your new home. So, that's a little bit about the buying process, a little bit about, how to get pre-approved, where to start. These are starting steps. And so I hope a lot of this information was of value to you. If you have any questions, please reach out to me. Victor, let them know how they can get a hold of you if they have any questions about the mortgage process.
Yeah, absolutely. You can definitely give me a call. My phone number is 214-753-3025. Again, Victor Almendarez, 214-753-3025. You can call me, text me, whatever it's easier.
Awesome, guys. And, well, you know how to get a hold of me. My phone number is 972-358-2177. You can message me on Facebook, where you'll probably see this video. Email me, text me. If you have a trained pigeon, like I say, send it over. So everybody, I hope this was a great video for you. And this was episode 2 of I Must Ask You a Question.